of today's data, how would you describe what we're heading towards?
I think we're heading towards a housing renaissance. I think 2024 is shaping up to be that pivot year.
High home prices and low inventory are making both sellers and buyers uneasy in today's housing market. The median sale price for existing homes in the U.S. reached $387,600 in November 2023, marking the fifth consecutive month of year-over-year increases. Although the average 30-year mortgage rate slightly eased to 6.96% in early January 2024 from the October peak, it remains higher than many homeowners' locked-in rates. The trajectory of home prices, mortgage rates, and available inventory will significantly influence housing affordability in the upcoming year. To get insights into the 2024 housing market, let's explore expert predictions on these trends. Jim Tobin, CEO of the National Association of Home Builders, sees a housing renaissance in 2024. Despite a recent dip in housing starts, Tobin is optimistic about significant growth. Affordability is a concern with a 6.89% 30-year fixed rate, but Tobin expects rates to drop further in the next 6 months. Lower rates are already bringing people back into the market, reflected in increased traffic at model homes. With a 1 percentage point drop in recent months and builder incentives, more buyers are getting below 6%. Tobin believes 2024 will mark a turning point, moving past the post-COVID slowdown. In 2022, mortgage rates doubled due to the Federal Reserve's actions against inflation, and they've stayed relatively high. While the Fed doesn't set mortgage rates directly, lenders follow its cues. Despite signals that the war on inflation might ease, experts predict buyers will still feel the pinch in 2024. Home prices stayed strong in 2023, but sales dropped, hinting at a market shift if rates decrease. NAR's Lawrence Yun anticipates a 15% sales increase with lower rates. Housing supply stayed low in 2023, with only a 3.5-month supply, well below the usual 5 to 6 months for a balanced market. Jim Tobin believes mortgage rates will drop further in the next 6 months, and so he encourages people to move away from holding on to lower rates. He anticipates a shift in perception, recognizing that even a 6% rate is good for long-term home investment. With incentives and government programs, he expects people to unlock from their existing homes, freeing up supply for the market. However, the pace of new home development is a challenge. Local governments control land use and permitting, and cooperation varies across markets. Tobin urges governments to facilitate growth by reducing permitting times and supporting land development. Coordination with supply chain partners is crucial to avoid repeating past challenges with high lumber prices and delays. Labor remains a persistent challenge for the home building industry, emphasizing the need for addressing this issue to sustain growth in the housing market. While both scenarios are somewhat unlikely, Yoon expects a modest increase in housing inventory in 2024. Regarding home prices, despite reaching historic highs in November 2023, Yoon predicts a moderate 3 to 4% increase in 2024. He emphasizes that a substantial rise in home construction could absorb this increase, especially with recent drops in mortgage rates. Prices are closely linked to housing inventory, and sellers may hesitate to trade low interest rates for higher ones, keeping inventory limited. It is suggested that over time, life events may compel more homeowners to sell, slightly boosting inventory. However, a significant increase is doubtful, so prices are unlikely to drop unless demand weakens. Currently, tight inventory favors sellers, as there are more buyers than available homes. Without a notable increase in inventory, the seller's market is expected to persist. It's also noted that the current inventory shortage makes it challenging for the market to shift towards a buyer's market anytime soon. Low housing inventory won't quickly improve, but high mortgage rates might ease demand, creating a more balanced market in 2024. Sellers might need to offer concessions like covering closing costs or rate buy-downs, while buyers should be cautious about stretching their finances too thin. With record-high home prices and increased insurance costs in coastal areas, it's not a buyer's market, and walking away might be wise. Despite challenges, if mortgage rates continue to cool, market activity could pick up. In these complex times, relying on an experienced local real estate agent, is crucial for buyers and sellers in 2024.